Do you own holiday lets or serviced accommodation? Then you will want to know all about value added tax and the things that you need to be aware of in terms of charging VAT to your guests, but indeed how you can claim that money back.
Alright, so let's have a look at value added tax on holiday lets and service accommodation. Before we get to the detail on holiday lets and VAT, we need to consider what the criteria from HMRC for your property to be considered a holiday let and service accommodation. First of all, the property needs to be available to let for 210 days out of the 365. The property also needs to be let out, so physically let out, for no less than 105 days in that 365-day period. And if you've got a tenant staying with you for more than 31 days, the total combined of those tenants staying in that property cannot exceed 155. So basically, they are trying to stop people from calling a property a holiday let, when in actual fact, you might be using it as an Airbnb product for maybe 30 to 60 days and then stuffing someone into an AST situation. So you do need to be very, very careful when you are going into a holiday let service accommodation and trying to get the benefits of the VAT that we're going to talk about later on. There are some other criteria that you need to adhere to, so make sure you get some professional advice when looking at running a holiday let business or service accommodation business. We're going to look at now the value added tax and what you need to consider. These are the four main subjects. So we're going to look at the value added tax of when you are £85,000 turnover or more in the last 12 months. We're not going to go too much detail into that, so I may cover that off now. VAT is a requirement for you to register once your turnover, as I said, is £85,000 or more in the last 12 months. So you've almost got to go back 12 months from the current day and say, has my income over the last 12 months been more than £85,000? If you've answered yes, then you will need to be registered for VAT on your holiday let service accommodation business. Now you can register before the £85,000 and you can claim VAT back, and I'm going to cover those points later. You must charge VAT, 20% VAT on all trade income, and we'll go over that of how it might impact on your guests of the holiday let. But you can claim use the 10.5% flat rate VAT, and there is a discounted rate of 1%. So your VAT flat rate could be indeed 9.5%, and we'll cover that in another section. So let's first of all talk about the claiming back VAT. Now, again, you may have purchased an awful lot of items to get your service accommodation on holiday let business up and running. You may have had services, furniture, materials bought in, and that VAT, you're looking at it and thinking, well, really, I want to get that money back. Well, you can. So you don't need to wait for the 12-month period, or when your turnover is £85,000 or more, you could indeed register before that. But nevertheless, once you become VAT registered, you are able to claim back VAT on previously purchased items. And these are the two subjects we'll talk about now. So this is whereby you've got physical items such as your fixtures and fittings, your furniture that's been purchased and still in stock with you for the last 4 years. So you can almost see yourself now not having to register for VAT for 4 years and still be able to claim back that VAT on those items. So if you've got some stock that's still with you and you purchased it for more than 4 years ago, you can still claim back that VAT. So that's a lot of money you can claim back. You may have had some services, so you could have accountancy services, you might have a planning consultant with you, you might have had architectural fees and so on for your building, and as long as you've had those services in the last 6 months, you can still claim back the VAT on those items as well. So the practical way of doing this is that you would have to look at your big items. Really, I wouldn't bother for anything less than £1,000 because it could be a bit of a faff, if I'm honest. You'd have to go through your Xero, QuickBooks, bookkeeping system, whatever you're using, and pulling out all those big items and saying, well, is it worth me trying to pull back the VAT on that? And you can then do an adjustment in your accounting system and claim back the VAT upon registration. You do need some technical advice on how to do this because Xero, QuickBooks and any other system have their own little quirkiness and it can mess things up for you. So it's good news that you can claim back a VAT on physical items that you've got from 4 years ago or indeed services that you've had 6 months prior to your VAT registration.
So I've created an online portal where it'll help you to understand how you can save SDLT when you're buying a property, value added tax when you're buying a commercial building or indeed refurbishing a property, the income tax and corporation tax that you can save when making profits on your property portfolio. So make sure you enroll today and start learning how you can save tax on your property portfolio.
Now, what I wanted to do on this one is to look at the what you can claim back. So you might have had furniture for £20,000, and as I said, you've got architectural fees of £5,000 to convert your property or do some work to it. And you've then spent £25,000 in total. You've got £5,000 worth of VAT, which you can then claim back. And what would happen is that you would have to do an adjustment in your accounts because you've claimed back the VAT. That therefore will need to be adjusted in your accounts. That's where you can get the money back, but you do need some very good professional advice here in terms of how to treat that VAT claim back in your accounting systems. But good news is you will be able to claim back that VAT. We're going to now talk about holiday let service accommodation and having to charge 20% VAT on the guest itself. Now, the impact we do need to think about, if you are now, let's say that you are charging £100 a night, for instance, and you are now charging VAT, the person that is going to have to pay you over money is now paying £120. And that's where you've got to think, well, can my existing customer base sustain that, or is there no impact at all? I'll give you an example, but if you've got a business person that's staying in one of your guest houses, holiday lets, whatever, then they could claim back the VAT themselves if they are VAT registered. So there's no real impact on them with you being VAT registered. But there is an impact on guests that are just holiday let stayers, people that are having family away weekends, or indeed people that are not VAT registered but business owners. So if you charge £100, all of a sudden their price of the room is now £120 and they cannot claim back that VAT. It makes it more expensive. Are you going to lose some customers as a result? You need to have a good sit down with your business partner, business mentor, whoever you use to say, well, what strategy are we going to have here? And do we need to reduce our £100 guest fee to £90 so that the impact of VAT isn't so erroneous on our guests? Something you need to really sit down and have a think about. But what I'm going to do here is talk about VAT typically, and that £100,000, you will have 20% VAT, and then that typically would be £120,000 that you charge to your guests, and that £20,000 would be paid over to HMRC every quarter. Now you can, if you've got expenses with VAT, that would reduce that amount. But as we all know, administration is a pain in the butt. So we're not going to talk about that so much. We're going to talk about value added tax and flat rate of 10.5%, which in the first year is discounted to 9.5% on your holiday let and service accommodation business. And the thing I want to talk to you about is you must apply for the VAT flat rate. It is not given to you automatically. You do need to go through a separate application for flat rate. Now you can do that as part of your VAT registration. So if you are saying I need to register for VAT, why not at the same time look to apply for the VAT flat rate as well? Now, your turnover upon applying for the flat rate scheme cannot exceed £150,000. So you've pretty much got to be below that before you can register for flat rate. And when your turnover reaches £230,000, you then must leave that business as well. The VAT scheme. As I said before, you get a 9.5% flat rate for the first year, and then 10.5% for holiday lets and service accommodation business activities. So let's have a look at value added tax and a specific example for holiday lets and service accommodation businesses. You might have a charge of £10,000 that's going out, but you are now VAT registered, and therefore your total charge is £12,000. Well, using the flat rate scheme, you might be able to make some profit out of it. So you've got this £12,000, which is the total cost to your guests. But the first year of being a flat rate scheme holder is that you would pay over to HMRC £1,140 of that £2,000. Basically, that 9.5% is on the total, so it's on the total £12,000, not the £10,000 as you might assume. To be fair, I assumed that when I used the flat rate scheme when I first started out in business, so I wouldn't be surprised if many people followed suit with that assumption. You would then make a profit of £860, and in the second year you would pay 10.5% on that total £12,000, being £1,260 handed over to HMRC, but you would still make a nice profit of £740. Bearing in mind, again, your VAT savings here would have to be calculated in your profit and loss, and you would have to pay income tax or corporation tax on that amount. So you don't get the total of that benefit, but you will at least make some profit on the flat rate scheme if you're running a holiday let or service accommodation business. Don't forget, if you do have any questions, make sure that you go onto our description box below this video and type in those questions so that I can be on hand to provide you with an answer within 36 hours. I shall see you in the next video.